Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Lalit Nambiar is EVP, Fund Manager and Head of Research with UTI Mutual Fund, and he's with us right now to take some questions. Lalit, morning. Thank you for your time. Are you feeling good about the market, especially market valuations, Lalit, or this is making you a little jittery, especially large caps, etc.?
I think we've been maintaining for quite a bit of time that there are pockets in the market where you can probably be safer in terms of margin of safety, and there are other pockets where things are looking a little, I should say, less, I think, attractive. So to that extent, what is playing out today is possibly our vulnerabilities when it comes to whether it's the rupee or whether it comes to run up to the elections. And some of these things are playing out even while we have an earnings season which has been, at least I should say, benign as of now. But I think the market's now focusing on what's likely to happen over the next 12 months. And from that perspective, obviously, a lot of calculations have to be reset in terms of where the rupee is, where crude is. And I think that's what's perhaps preoccupying the market.
But Lalit, the market seems quite resilient to the fact that the rupee is at 70 and, Brent is also just about around those levels.
My sense is, I mean, it's very difficult to comment on a day-to-day basis, but my sense is that some of it is probably already, considered. I think part of it is also the fact that a lot of foreign selling has already happened. And to that extent, presumably, there won't be so much more selling. If anything, it might make, the rupee level may make a few foreign investors rethink their position on India. Perhaps it's a good base to come in at this currency level. Because if you remember, a lot of the FIIs have lost money more on the rupee dollar than on the intrinsic return in India.
Just a quick follow-up, would you be buying into IT and taking fresh positions, say in frontline IT stocks which have run up already? A case in point, Infosys?
So without getting into specific stocks, I think the underlying business case continues to be there in terms of the IT sector. Which specific stocks to buy would depend on the individual fundamentals. I think it would be bottom up rather than a pan-sector approach. Obviously, this is a good tailwind to have, but some of it obviously is taken away even by the customers because they also can see that your costs are getting recalibrated. So to that extent, I think in the short term, these movements help, but in the long term, it sort of keeps your efficiency levels or your makes you comparable in terms of competitiveness on costs. And that's about all there is to it. Of course, in a longer term, IT has benefited from a depreciating rupee.
What about pharma, Lalit?
I think that sector has certain issues at an intrinsic level, which is getting sorted out. But I don't think the worst. I mean, possibly the worst is over, but perhaps there's still some way to go, and we may not necessarily see the golden era which we saw a few years ago, in terms of those huge profit margins and lack of competition and perhaps a slightly more benign regulator. I think those days are past. So from here on, it's going to be hard work, but I think there are some attractive opportunities nevertheless.
How worried are you from a market perspective about this entire Turkish lira situation? Do you think it's just localized or there is a risk of some sort of contagion?
So in terms of whatever I've read, what I understand is that a lot of exposure with respect to Turkey is with the European banks. And I think what the markets globally are more worried about is the Chinese yuan, in terms of where that's going, and that's been depreciating. If actually people have observed over the last 1 month or even 3 months, the yuan, especially in the 3-month basis, has depreciated more than the rupee. And that has people worried because that could mean capital outflows from China, which is not necessarily a good thing for the global markets, and that's got people worried.
Okay, so essentially you're saying that the focus will shift back to the Chinese yuan, and that's more important to track as compared to the lira, etc. Point taken. I know you don't manage a gold fund or something, Lalit, but do you have a view on gold prices? I mean, prices internationally have lost some $300 in the last, 3 months. What's your view? Or is there a house view really, is what I'm trying to understand.
So we don't have a house view on commodities, but the underlying economic rationale in India has largely been that the gold is a good proxy for the rupee dollar. So if you can't directly own currency, then gold is a decent enough proxy. And essentially, if you've seen the movement in gold internationally and domestically, as you yourself mentioned, you'll clearly see that the difference is largely the rupee. And that's the way to look at it. So if you're someone who is not in a position to directly buy currency or try and hedge your currency exposure in case you have expenses outside India, then perhaps as a householder in India, gold is possibly a very good proxy, and that's about broadly where it is. And intrinsically, as far as gold is concerned, I'm sure global views differ in terms of how safe it is and whether it's it's now a relic and it's not something to be really looked at now. But I think in India, clearly, it continues to be a proxy for the dollar.